What is up, degenerates? It is Wednesday, November 19th, about 5:30 as I record this. I will put it up later tonight, probably around 7, if I can get it uploaded properly. Lots to talk about. First, we are waiting for declaration from RexShares Altai. They declare after the close, sometimes at 6:30, sometimes at 7. So I'm not going to wait for that. They paid 35 cents their first payment last week. They declare Wednesday, pay Friday. And at the time, it was like an 80% yield. They've been hammered in price. Again, grass is not always greener for you. Alti sell, go to Altai. I like their strategy. It's the market's been hammered. They were down like 25% one day last week. So what were they today? They were down 2.04. Again, a mixed bag. Some green, some red. So anyway, their 35 cents is now a 101% yield based on the current price. I'm going to give them 35 cents again for 101% yield because we just don't have enough info on them. Oop, I did not uncover that one. I don't even know why I covered it. 35 cents, 101% yield. We'll see what they do. What happened in the market today? Well, my portfolio was down like 1.9, up to the close. After hours, as of now, it's 5:30. I'm up 1.9. I'm even for the day. So why NVDA? NVDA, largest company in the world as far as market cap. They declared earnings. I don't know if Trade will have them on here yet. No, but they beat earnings by about a little over 4%. They beat revenue by over 4%, as we predicted. And if we look at the pivot points, they bounced off this support level for a few days. And this is during the day, they were up 2.85%. So someone knew something. People were buying in early. After the close, this was at the close, they were at 186 and a half. Post market, in the last hour and a half, they've gone up to 196. And they're working on this pivot point. They may blow through that. The problem, be careful the next couple days because we've got some numbers coming out tomorrow. Some government numbers. I think tomorrow is. Well, I can tell you. Let's go to Bitcoin because they always show what's happening. Yeah, they do. Okay, so tomorrow we've got existing home sales, non-farm payrolls, and the unemployment rate. That's tomorrow. And so that could change everything. It could be good, could be bad, could be volatile. Volatilities are way up. I'll show you that in a second. But let's go back to the spreadsheet. We'll talk about Yieldmax. They launched their Target 25 funds, which I like. I'm not going to buy them because that's not degenerate enough for me. But for you guys that didn't understand the risk of these single stock funds, you saw your NAV go down and you panicked and you sold. These are good for you because I think you're going to get a targeted 25% yield. So I think you will see some upside on the NAV. Along with that, hard to say how much, hard to say if ever, if any. But I think they're for someone, not for me. Maybe in the future. And I just want to mention Alti. They declared yesterday. Today was X day. Still an 88% yield. Again, it's a $4 fund. They declared 7 cents, almost 8. Then it went down to 6. and everyone said it's going to be 5 now, maybe even 4. It was actually a little more. It was 6.26 cents last week, and then they declared yesterday 6.42 cents. So a little bit of a raise. Are we cheering over it? No, but I'm okay with it. And with the reverse split coming, we'll see, what happens. So anyway, I'm not selling any of these yet. I'm dripping them all. I'm not adding new money to any of the Yieldmax funds. I will, if we see a good, another good bull run, I might start investing in the inverse funds from Yieldmax. I already own Fiat. You guys know that. It's been killing it. But now they're overpriced, especially winter. I mean, that thing's gone through the roof. That's the inverse fund on MicroStrategy. Kind of the inverse to Misty. So I want to see those come down, the others go up, then I'm going to jump in some more inverse funds. Anyway, that's what I'm doing. So Yieldmax Group 2 declared today, starting with Abney. They've paid 5 cents, 9 cents, and now 10 cents. That's a 49% yield. AIYY, 3 cents, 2 cents, 2 cents, but a little more 2 cents. 2.61 up from 2.9, down from 2.94 to 2.61. Still averages 3, 76% yield. AMD, 14 cents to 17 cents, that's 88% yield. AMZ, that's on Amazon, 10 cents to 8 cents, that's disappointing. Is now a 62% yield based on the last 3 distributions and the current price. This is the closing price, not after hours. Aptly went from 6 cents to 9 cents, 34%. Babo, I love Babo, 13 cents to 12 cents, 48% yield. Berk C on Berkshire, 40 cents to 24 cents. That's just disappointing, 29% yield. Coney, 8 cents to 6 cents. That's disappointing because that's a big holding of mine. Still a 72% yield, so I'm okay with it. Circo, the winner of Yieldmax, based on the last 3 distributions and the current price, the closing price today. That's on Circle Internet, 64 cents down to 51 cents, but it's a 129% yield, almost 130. So that's the winner. Crash Inverse Fund, 3 cents, 5 cents, 5 cents, 84% yield. And again, I'm interested in the inverse funds because the last couple of weeks have, I'm not worried. I do use a little margin. I'm not close to a margin call because I don't use a lot. But seeing, I think I was down 8% one day, and then it was up 3%, then down 5%, and then today it was down almost 2%. But then, after hours made up for it. But it's going to be rocky for the through the rest of the week, for sure. Carvani went from 43 cents to 56 cents, 74% yield. Dips, another inverse fund on NVDA. Probably going to struggle, coming up because NVIDIA's really running after hours. But anyway, went from 8 cents to 5 cents, 58% yield. But it's a good hedge, because NVIDIA can't run up forever. As we've seen, it's come down. Dips has been a good fund. Dizzo on Disney, 6 cents to 6 cents, 30% yield. Dre on DraftKings, 45 cents to 54 cents, 77% yield. Again, all these pay Friday. Phoebe on Facebook, Meta, 9 cents to 9 cents, 43% yield. Fiat, again, I own that. That's the inverse on Coney, on Coinbase. Paying cheap. It was 4 cents, then 6 cents, then 6 cents, but that's 106% yield because it's only $2.81 for the fund. So I keep dripping it, getting more shares, and just letting it ride. GDXY, 13 cents to 20 cents. Gold's been good. That's a 52% yield. Gamey on GameStop, 51 cents to 51 cents, 65% yield. GUI on Google, 9 cents, 9 cents, 57% yield. Let's go down more. HIYY on Hems and Hers, 67 cents to 63 cents. That is a 111% yield. A lot of 100%ers in here. And this is based on the last three. They're not flukes. So for you Yieldmax haters, I don't see it. I do see it, but these other funds are going down too. So, that's the market. Hui on Robinhood, 92 cents to 79 cents, 96% yield. Jitmo on JP Morgan, 10 cents to 7 cents, 36% yield. Maro continues to kill it, 26 cents, now 21 cents. It's gone down, but it's still 126% yield, almost 127. Almost a top Yieldmax fund. Murney, you can hate Murney, but I do own it. I do drip it. 2 cents, 2 cents, 2 cents, 82% yield. And that is doing a reverse split. So that, and again, if you don't understand that, a reverse split increases the price per share, decreases the amount of shares you own, and then increases the distribution to keep the same yield. So it doesn't change anything. It's real. I believe it's maintenance for these funds. When a regular stock like NVDA does a reverse split, that can be bad because that's based on the profits of the company. This is not based on the profits of Yieldmax. This is based on the income of Moderna for Murney, for example. And they got to pay 90. The RIC rule says they got to pay 90% of the income. Well, if the fund's only bringing in, X amount of dollars and they're paying 90% of the income, it's going to drop. So they're just not bringing in enough to keep the NAV. Anyway, that's another story. MSFO, Microsoft, 10 cents to 16 cents. That's 38% yield. Misty, you can hate Misty, but I love Misty. 16 cents to 14 cents. Still 100.01% yield based on that. So I am dripping that. Netflix on Netflix, 8 cents to 8 cents, 35% yield. NVDA, we're going to see big things here, I imagine. 14 cents, 14 cents. Average is 20, so we might get back to that. 71% yield. OARC, one of the oldest Yieldmax funds, along with Tesla. 8 cents to 7 cents, 52% yield. Play-T on Palantir, 83 cents to 72 cents. That's an 88% yield. PayPal on PayPal, 9 cents to 7 cents, 54% yield. Robly on Roblox, 41 cents to 41 cents, 59% yield. Ready on Reddit, 62 cents to 52 cents, 84% yield. SimC, I like SimC, 21 cents to 19 cents, that's a drop, 129% yield. Snoy on Snowflake, 15 cents to 14 cents, 65% yield. Tesla, another one. That's I'll show my Snowball Analytics another day. It's a dividend tracker. It shows your total return for each of the funds that you own. Tesla's the winner for me. It's way positive. I mean, I forgot the exact amount. It's like 40% year to date, and I didn't buy it till March. So we're looking at 8-9 months, and it's paying 76% yield, and it's paying way more than it's gone down. So I'm happy with that. TSMY, 14 cents to 10 cents, 47% yield. Winter, big one. What did Winter do today? Up 6%. Look at that. And Strategy was down almost 10%. So the inverse funds are making sense to me. I'm waiting till a little bit of a bull market, so those will go down, and I'm going to jump in. Anyway, Winter, 81 cents to 84 cents, 117% yield. And winter's at 35 bucks. In fact, let's look at that chart because you guys hate inverse funds and a lot of them are down, you know. Look at this. Nothing but up. But of course, strategy's been nothing but down, and this is an inverse fund. So, you know, you've got your NAV is killing it, and you're getting distributions. So that might be my next inverse fund. But again, I want to see a little bit of a drop in price, but it doesn't matter. It's not about timing the market. It's about time in the market, which is what we're doing. So Zomo on ExxonMobil, 7 cents to 8 cents. That's 31% yield. XYZY used to be Squee. Remember that? On Square. Now they were Block and another XYZ. I don't know. 10 cents to 9 cents, 75% yield. YBit is a Bitcoin fund. 7 cents to 7 cents, 55% yield. And again, Bitcoin's been hammered. So, you know, that's pretty good. YQQQ, which is a short NASDAQ 100. Let's see how they did today. Well, the NASDAQ was up 0.6. So the YQs was down 0.07. As expected. It's a short fund. But they've paid 10 cents, now 7 cents they declared today. That's 30% yield. So overall, Yieldmax was down 0.68. And the underlyings were down 1.11. And shout out to Miggs. He wants me to take out the inverse to see how Yieldmax really does. But the inverse are part of Yieldmax. I mean, I think it's important to have the inverse funds. I mean, if you pair up Misty and Winter, you know, equal amounts of both, you're going to get yield on both sides, and one will go up, one will go down. So you're not going to get any growth, but you're not going to get much of a loss either. They're not one-to-one hedges, but I think that's smart. So anyway, shout out to Miggs. I appreciate you, buddy. All right, so that's Yieldmax. Let's talk about Defiance. What'd they do today? They declared their couple of funds. GLDY on gold, 16 cents to 16 cents, 57% yield. IWMY, which one of the first funds I owned, still own it, not a lot, but I do drip it. 16 cents to 15 cents, 46% yield. QQQY, which is a NASDAQ, 16 cents to 16 cents, 37% yield. USOY on US oil, 7 cents to 9 cents, 61% yield. And WDTE on the S&P, 19 cents, 18 cents, 31% yield. And I did change this column on all of these, all the way to the right here, column M. Months to return on investment. I used to have how many dollars it would take to make $1,000 a month in each fund, with nothing changing based on current distributions, current price. We know that changes. Now I have months to ROI. So the winner of Defiance is SMCC, which you know I've been buying based on current conditions. Again, not financial advice. We know this is going to change, but you get your money back in 7 months. If you put in, say, $1,000, don't drip it. You've got your $1,000 back in 7 months, based on the current distributions. The worst is QLDY, but that's an index. That's NASDAQ. That's the lightning spread. They pay twice a week. So they'll declare again, I think tomorrow. We'll talk about it when we get to it. 57 months to return on investment. So that's that. Let's talk about Yieldboost, because they declare tomorrow. One of my favorite fund managers. Shout out to Yieldboost. COYY is paying 187% yield. Again, these are put credit spreads Very capped on the upside, but very capped on the downside. And let's show you that. COYY, which is based on the coin-based double leverage fund. These are all double leverage that they do their put spreads on. CONL, which is the double leverage fund, was down 3.4. COYY only down 1.35. Only captured 39% of the loss. But here's the other side. Robinhood double leverage was up 6.6%. HOYY only up 2.2, so you only captured 33% of the gain. You get my gist. So way capped on the upside, but way capped on the downside, and paying massive yield. So let's go to the guesses, because that's all you guys care about, right? COYY paying 187% yield. The IV is not there, so I keep underestimating them. Down to 31 cents, 156% yield is my guess for tomorrow's declaration. I'm always wrong on these. I always underdo them, and they keep overpaying. Is that good? Yeah. I mean, the NAV goes down along with with these, with a lot of them. NVYY, I'll get to that in a minute. That's if you want more stability, that's kind of my favorite with Yieldboost. But anyway, HOYY. They're averaging 57 cents. They're overpaying the IV 52 cents, 154% yield. TSYY, now my biggest holding again. It flips with ICOI based on dripping and current prices and stuff. So TSYY averages 19 cents, 168% yield. IV is only 104 on the double leverage. So I'm getting them 16 cents, 136% yield. Still massive. They're all massive. SMYY, super microcomputer, double leverage. They're averaging 57 cents. I'm getting them 56 cents. AMYY averages 48 cents. I'm giving them a raise. 52 cents, 113% yield. All 100%ers so far. I think there's a couple that won't be, but like XBTY, Bitcoin. No, I think I gave them 100%. Anyway, averaging 28 cents, 116% yield. I did bring them down because they're paying more than the IV. 27 cents, 109% yield. NVYY. This is why I like this one. It's at 21 bucks, so it hasn't dropped a ton like some of the others. I mean, TSYY is at $6. That's dropped. NVYY, 21 bucks. It's paying 105% yield. The IV on NVIDIA double leverage is 104. So it's paying right there. So I'm going to keep this right there at 43 cents, 104% yield. And a lot of people, that's their favorite Yieldboost fund. I like them all. I don't own them all, but I like them all. PLYY, Palantir double leverage, is averaging 110. IV is 114%. So I'll give them a raise. 46 cents, 112%. BBYY on Alibaba double leverage. Paying 106, but the IV is only 90% on the double leverage Alibaba. So I will drop them to 40 cents, 98% yield. IVs on every single fund I looked at today were up. The volatility is up, which is good for us. We want option premium. So it's good stuff. It's a great time to be an investor in these, I'm telling you. MTYY averages 29 cents, 123% yield. I'm giving them a raise. 34 cents, 141% yield. 9 months to return on investment. TQQY, which is on the Qs. Again, safer fund because it's more, it's options on an index. Averages 63%. I'm giving them 69%, 23 cents. Yeah, we got a few more here. TQQY, we talked about that. YSPY on the SPY. Again, safer fund, more diversified. Less IV. IV's 55%. I'm giving them 53%, 19 cents. AZYY has been underpaying the IV. They're averaging 23 cents. I'm giving them 26 cents, 62% yield. FBYY on Meta, Facebook, if you want to still call it that. I do sometimes. Averages 22 cents, 55% yield. The IV 68. So I gave them 25 cents, 62% yield. MAAY averages 63 cents. They've only paid twice, 67.58. Averages 63, 164% yield. I'm giving them 54 cents, 140% yield. So a drop, but hey, 140%. IOYY was paying massive. They went from 70 cents to 68 cents. They're still paying massive. 154% yield. The IV is higher, so I'm giving them more. 74 cents, 164% yield. Now we got two new funds. Nuggy and Sim. Well, we didn't want that. Now it's going to keep. There we go. Nuggy on double leverage gold miners. Just launched, I believe, yesterday. It is at $25. It was up 1.05% today. And Semi, which is a semiconductor yield boost fund based on Soxel. We know Soxel. That's a 3x semiconductor bull fund from Direxion. They were up 1.79% today. Again, capped because the underlyings were up. Nuggy underlying was up 1.83. They were only up 1.05. And Soxel was up 4.66. Semi up 1.79. Only captured 38% of that gain as expected. Overall, underlyings were down 2.41%. Yield boost was up 0.35%. So this is what they're designed to do. Capped on the upside, capped on the downside. Pay me my money. That's all we care about. So they haven't paid yet, but what I've noticed with Yield Boost, when they launch a new fund, even after 2 days, they'll declare something. So I do expect, and I looked on the website, it doesn't have any information, any schedule on when they're going to do their first declaration. So we're going to guess on them. Again, may not even declare tomorrow. But the IV of the two-time gold miners is 86%. So we're going to give them 86%, 42 cents. The Soxel, the IV is 118, and it was like 110 day before yesterday. So way up. So I'm going to give them the IV because, again, we have no data. We don't know what they're going to pay. So I gave them 118, 57 cents. So they're averaging 119% yield based on last three payments, current price. I'm giving them 113 because they're overpaying, but they keep overpaying. So, it's hard to guess. Not financial advice. Just fun and entertainment. Tuttle Capital declares tomorrow. Shout out to Wolf. He and I are Tuttle Capital fans. They have Income Blast funds, which are covered call ETFs. They have a synthetic, and they do covered calls 0 DTE. So you are less capped upside because you don't wait a week, to blow through your calls. These are same day, in and out. So BITK, which is on IBIT. IBIT was down 3.67. BitK was down 3.63. They captured almost the full amount of the loss. MSTK on Strategy captured more of the loss. They were down 11%. Strategy was down 9.82. So they're kind of one for one, but shouldn't be as capped on the upside. They were both down today because their underlyings were down. But I think on the way up, you're a little bit better off. So anyway, BITK's averaged 18 cents pretty steady. Last 3 weeks, 18, 18, 18. They declare tomorrow, ex-date Friday, payday Monday. These are my only Monday payers as of now. BITK's averaging 52% yield, 18 cents. And that's right at the IV. They overpaid, I believe, the first payment. It was like 300%. Now they're right back to the IV, which I like. So I'm giving them 18 cents, 52% yield. MSTK is overpaying, but they've been pretty steady. 50 cents, 50 cents, 50 cents. 150% yield. The IV is only 88%. So I'm giving them a drop to 40 cents. 119% yield. Still fabulous. So 8 months to ROI on MSTK based on current distributions and price. Not financial advice. You guys know that. Roundhill, we won't talk much about Roundhill because they do declare every day of the week on one of their funds. Tomorrow they declare on Maggie. Maggie was up 0.43. The underlying is Mags. 0.79 they went up, so they captured half the gain. That's Mag 7, so a little safer. And they paid 37 cents, 37 cents, 38 cents, 36% yield. So I'm giving them 38 cents. I didn't cover that up. 36% yield. So nothing new there. Anyway, that's the coverage. Let me know what you think. Hit the like. I appreciate those. I can't tell who likes them, though. So if you hit the like, it doesn't tell me who liked it. So hit the like. That helps the algorithm. If you hit the thumbs down, you're welcome to, but you got to leave a comment on why. Because I have gotten some thumbs downs and no comments on why. Constructive. Or if you just want to hate, I got a couple haters, that's fine too. But let me know what you think. Where do you think the market's going to go the next couple days? I think it's going to be a roller coaster. So I'm not adding any new money. Rest of the week, I'm just dripping, buying more shares of the ones I own. And we'll see what happens. I think next week we'll have a better picture on where the market's going to go. We've got all these earnings out of the way. We're going to have these, unemployment rate out of the way, non-farm out of the way. And I think we'll have a little less volatility, which is bad for our options, but good for our portfolios, I think, in the long run. And maybe we'll get a run up for Christmas. Anyway, let me know what you think. Appreciate you guys, and we'll talk soon.